We got gold holding its own. I love to see this higher low forming in gold. I'm kind of trying to figure out what I want to do with this position. I've been in gold for 1, 2, 3, 4, 5, 6 days. We're in a nice profit on this one, but I'd love to see if we can clear the highs here and make a move. Nvidia earnings came out. Rockstar stock down 5%. Earnings were phenomenal from Nvidia, but this was a classic example, guys. I know I'm speaking with hindsight here, but it's a classic example of, expectations just being so stinking high, right? So expectations for Nvidia were so astronomical going into this earnings. How do you beat? I mean, guys, I don't know if you reviewed these numbers, but let's look at these numbers in case you missed this. They expected, the estimate from analysts was $28.73 billion in revenue for the quarter. That's, first of all, insane. They came out with 30 billion. They beat estimates substantially. You know what else they did? They beat the final earnings reported sizably as well. So the stock goes down. What's that all about? Well, the reason, arguably, is just because people have such high hopes for this company that the expectations of Wall Street are like way up here. And if they don't surpass that by a long shot, the stock gets punished. It's kind of weird, but it's almost like, I think about, for maybe a sports reference, and I should never do sports references because I don't know anything about sports, but I know that, Alabama football, college football in the US, big thing. Alabama football, for the last 10 years is probably the best team, right? Everyone knows that with the coach there, Nick Saban, when he was running the show, expect that team to be a killer team. So my point is, whatever team you want to swap out for Alabama football, whatever you want to put in there, the best team, everyone knows and expects, okay, these guys are tough. So you go in with that mindset. Nvidia is that. It's the best team. Everyone knows this company is insane. They're going to kill it. They're going to make so much money. So to really shock the world, they have to absolutely shock that high expectation, which is what they were not able to do yesterday. Even though I'm very content with it. As a shareholder, guys, think about this. I own the shares. I'm in this for a longer term. This is not a short-term trade. I just have some Nvidia shares. What was my reaction to this? Great. Awesome. A company that I own share in grew revenue faster than what was expected. That's great. On a short-term basis, it might not be enough, but on a long-term basis, I'm very content with that. As a shareholder, longer term. This didn't change the story. And so, you know what that actually leaves me to, kind of my synopsis on that is, that's probably how most investors Nvidia feel. If you went into yesterday owning Nvidia, and I will get to other charts in just a second, guys, but please understand this is very important to the whole story. I just missed unemployment claims. I'm sorry. I'll look at that in just a second, guys. It is moving the market. It doesn't change anything. I'll come right back to Nvidia because I don't want to. I'm sorry for missing the. I'm all over the place this morning. Okay. All right. Unemployment claims came in right in line with expectations. Market's going to say, okay, preliminary GDP came in 3%. Ooh, baby. Ooh, baby. We like to see that. We definitely like to see that. Look at this. I survived my trailed stop here. I almost got stopped out or trailed out for my my SPX position. I have a position on SPY. Price came down on the Nvidia earnings, but narrowly missed my stop loss and is rebounding right now off of that better than GDP number. That's the big number right there. Preliminary GDP came in way better than expected. 3% growth. Heck yes.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
So I'm long SPY. Nvidia earnings spooked it a little bit, but support held, and this is good. If this level breaks, guys, I'm out. Taking profits on it. We're currently floating $36,000, which I've been saying this on repeat. Whenever I pop open these charts, I understand that, you know, it can ooh and awe people initially, but please also understand I went through a pretty rough drawdown. I had about a 10% drawdown on my account in July going into August. I had some great trades on gold. Things were rock solid. The account was hitting an all-time high. And then during this time, I decided to start trying to buy the indices too early, and that cost me some drawdown period. So although, yes, this is a really nice position for me, this is only just now about recuperating the full drawdown amount. So I've just come back out of my drawdown. The GDP numbers came out this morning. They were stronger than anticipated, and why is that bearish for gold? If you're somebody watching gold here, so GDP score is not going to change because the previous GDP number beat estimation. So we already have a -1 on the GDP column. So the gold score won't change off of that. And while that's not particularly bullish for gold, there's enough here that I still remain bullish on gold. Let's break this down just for a quick second on how the algorithm is determining that gold is more bullish than bearish when looking at the economic data, the technical reads, and sentiment. Well, first of all, the commitment of traders data shows us that institutional money is very long gold. And if you want to see that, if you don't believe me, let's pull up the commitment of traders report and we can get an idea of where institutional money is long and where they are short. So take a look at this. The net positioning tool right here shows you that of all of the symbols that we track, gold is actually the most long, 85%, let's call it, of contracts traded by the non-commercial COT report, which is the hedge funds and banks and speculators in the market. They're very long on gold. They have huge positioning on the bullish side of gold. So keep that in mind for a moment. I mean, so right off the bat, institutional money leans heavily in favor of gold longs. And they have been for a while. They've made a lot of money. If you followed institutional money for the last, few years, you'll know that they've had a really big positioning on gold. Do you know how much gold is up this year? Yeah, maybe it's down on the morning. Gold's up like 20+%. I think it's like 22% year to date. Gold is up like 22% year to date. And who is buying? Go figure. It's the big players. The big players are super bullish on gold. And you might say, well, Nick, doesn't that mean that it's going to reverse soon because it's already made a big move? Well, no, that does not have any bearing on whether or not it's going to reverse. Okay.
So the dollar pairs are pretty active this week, while the JPY pairs are looking pretty flat, corrective, and range bound. So the euro and US dollar is having some big bearish momentum legs on this 1 hour chart, and I'm looking for sell setups, but I would want to see this push continue down a bit more. Then we have the euro and the Japanese yen, which is pretty flat and corrective, just broke out of this major range and retraced. So I'm expecting more range bound price action. I'm just leaving this pair alone. Aussie US dollar was looking pretty flat, so I did employ my range bound entry, basically sold when we broke the top here, and like it almost hit a take profit. It missed me by 1 pip because of the spreads and then went all the way back up for a loss. So it's one of those. Yeah. But yeah, currently it's looking still pretty corrective. I will be more patient on the Aussie and US dollar as well. AJ is very corrective. If I zoom out, it's just looking completely flat and all over the place. Maybe this move can get some conviction, but currently it's not looking that good. Pound US dollar is kind of moving down a little bit, printing some big bearish candles, but again, I need to see more conviction than this. I want to see a trend start such as this one that we had. This was absolutely perfect. So there's a clear distinction between this market condition and this one, and this is what I wait for. And the final one is going to be the New Zealand and the Japanese yen, which did break out of the range, which is pretty interesting. Only JPY pair that actually broke out, but then it paused here in the top a little bit. It could not commit fully. I am looking for potentially another push up and then to buy right here. So that's kind of my analysis. Nothing is a 10 out of 10. Everything is, I would say, very corrective, and I still need to see some major momentum kick in.
Sure. Yeah, no, and I kind of agree. We had that some very clear trends on the yen crosses, and then now bit of choppiness, bit of back and forth. Just taking a look at the dollar yen as an example, you had these big downtrend moves, and then now a little bit of back and forth, it seems, for the time being. Miko, what about yourself? Are you watching more dollar crosses, yen crosses, metals? What is top of mind for you?
So yeah, USD pairs is kind of what I'm looking at. We've seen some really nice upside over the past couple of weeks, and it looks like we're starting to see the market take a bit of a breather. And I do think there is still room to the upside for the dollar pairs. I think USD still has some room to the downside, although we've hit some big areas where I do think we'll probably see the market take a bit of a breather, have a bit of a pullback. So hopefully this could line up for some nice long opportunities, some really nice swing opportunities, hopefully sometime next week. A few areas I'm looking to buy from, especially for Euro USD, 1.104 and 1.1 on the dot pretty much. But my targets for Euro, all the way back here at 1.125. So in my book, there's still room to the upside, still a lot of momentum there. The market's very consistent with the higher lows. So as long as we keep that pattern going, I would expect to see another high low form, maybe around these areas where I'm looking to buy. And hopefully you can see price push on. Pound USD looks good as well. I'm looking for upside. We've smashed through this high here. No real retest of that area. So if we do get a pullback, hopefully we can see some confirmations and some buys there. So very, very similar opportunity with pound. USD CAD, similar trade, but of course in the opposite direction. A lovely level of support here. We smashed through that with a big candle. So again, looking for a bit of a breather. Hopefully come and retest 1.36. And then I do think we can see some downside. So I'm still very much weak, bearish on the USD. I think we can see a bit of a pullback, maybe next couple of days or week or so. But I do think weakness is still in the pipeline.
I like that breakdown you did on the euro as well. Just I kind of on the same page with the dollar. I think that you may see a little bit more room for the dollar. It's had this huge leg lower. It's kind of you are here sort of moment. I think it's possible you do see a little bit more pullback in the dollar. I'm not bullish on it, but I just wouldn't be surprised if after such a kind of one-sided move, you see a little bit more pullback. I really like the 61.8% retracement on the euro, though it very well could hit like that level you had, like the 1.1 area, the 1.090. I wouldn't be surprised if you get a reaction to one of these levels. I wouldn't know which one exactly, but the one that I like the most obvious to me would be that 61.8% retracement, the big kickoff point where we really saw price move. And what I like about this level too is that we tried once to break through that level and saw a huge reaction to it. Sellers tried real hard to hold that level, and then when buyers really were able to close above, that just tells me that this area from a price action standpoint very clearly was won by the bulls. So I would imagine that if you do get kind of a bigger pullback here, maybe that 109.5 level on the euro could be an interesting one to watch. That's one that I've personally got my eye on. So just wanted to talk on that with the euro, just because again, that would be the 61.8% retracement to the recent rally. Next question, I guess, for you guys is the metals. Gold, silver. Gold's been chopping around near its all-time highs. Silver's been all over the place. Marko, what are your thoughts on gold or silver?
Sure. So for gold, it's best for me to analyze the daily chart. It did create some new highs as we saw, but again, I'm not seeing that convincing momentum. I haven't backtested gold that much, so I'm not sure fully how it moves. But for me as a Forex trader, I usually like these sort of trends. This gives me a lot of conviction, and this just looks to be struggling, like breaking the highs and retracing, which in the Forex world, for me personally, is a bad sign. So it is moving up, but I wouldn't say there's a lot of momentum behind it. Silver, I think, looks even worse. Let me check it out. Yeah, it looks even worse. For me, this is just stuck in this sort of range-bound price action, corrective price action. So I would need to see, for a bullish scenario, a nice large impulse to the upside. I would like to see this price action repeat itself. So these big moves, big legs, consecutive blue candles, that would be a great bullish story. This is kind of struggling in my personal opinion.
Yeah, no, I think it's definitely lost that. It's become a very slow grinding upward trend, which, without getting too far into the fundamentals, just the basics of it is when you get fear events, gold trends like this. When you get like, okay, the Fed's going to cut rates, but the economy is more on the stable side, you get more of this uptrend. Because the long story short, rate cuts usually makes the dollar weaker, which in turn usually turns the gold market to go higher. But it's not a rapid rise, which usually coincides with fear, like concern, like, oh, the economies of the world are going to crash, or these countries are going to blow each other up and they're going to attack each other, like all that stuff. That causes more of a fear response move. And as even everyone knows, fear is a very strong motivator, so it can cause gold to move higher. Another last point about that, in the options world for gold, I think this is really interesting. In the S&P 500, there's what is called a call skew, which is people typically prefer buying calls, but it's even more prevalent in gold. Like there's a huge preference for calls because it's almost like an insurance, purchase. Like when you buy gold calls, that's like, leverage bets out of the money. It's almost like an insurance policy. So gold typically sees that. So just something to discuss kind of its nature. Anyways, same question to you, Miko. Is this gold trend, does it have more room, or is it getting tired? What's your thought?
I think it's a bit of both. It is getting a little bit tired if you compare it to the prior price action of early in the year. I mean, a lot of momentum there. So there is a clear difference between the current price action and the start of the year. But I do think there is still a lot more room to the upside. I think, like Marko said, if this was an FX pair, I think it'd be a bit more worrying. But because it's gold, I feel like we could still kind of correctively move up, and then maybe we explode at some point due to some reason. So I wouldn't be too frightened by that, and I'm still very much bullish on gold as well. I think as long as we maintain these higher lows as gold been pushing, as long as you don't do something drastic, I'm still very much expecting gold to push higher. We've created a bit of a top here as well, so we are struggling. We're not moving very smooth, but we had a big level here, which is the level I think you're buying from, Nick. So we've broken through that. There was a nice retest there. We could see that pattern repeat itself above it around 25.30 as well. So I do think there's still room to the upside for gold. Yes, we're not moving great, but I wouldn't be surprised we break out and we keep flying. So yeah, I do think more upside is likely.
Yeah, I think I fall into that camp as well. And I was making this point earlier, but I'll just recap it for just a second. I was pointing out that, the gold market this year is up even more than the S&P 500. So even though we've talked a lot about, the stock market's rallying so much, gold's actually outperformed it on a year-to-date basis, which is very impressive. And I was just pointing out that quietly in the background, it's smart money, quote unquote, the big money that's really partaking in that rally. I just thought that was really interesting. You have a lot of long exposure, as shown in the CFTC's Commitment of Traders report, just showing that institutional money is still very parked in the gold side of things. What would actually make me a little bit nervous to this trend would be if we started seeing big outflows of gold buying. But we don't really see that. If we actually take a look at the latest filing, we see that there's still, a huge change to the upside in long contracts. We saw more longs getting added, very small amounts of shorts added. So something to indicate or just keep an eye on is the commitment of traders data. Even if you're not a, quote unquote fundamental trader, this is just more of a sentiment tool. Sentiment can be very useful. So as long as we continue to see that, I think that gold has continued room to go up. And then, as all three of us actually, practice, the only way we would actually get short on something like gold, I know, Marko, you don't actually trade gold, but like the only way you get short on something like this would be as if you actually saw meaningful momentum to go lower anyways. Of course. So even if, you're on the sidelines, it would take something really drastically changing here for us to get actually short biased. So just wanted to point that out to the audience. All three of us are typically trend followers looking for momentum, and Miko and I especially looking for like pullback setups, and so is Marko, but on a more kind of rapid, quick getting into really healthy momentum moves, which clearly he has his successes with. So next question, we always end here. We always take a quick look.
You're in a long setup on gold, or?
I am, yes. I bought gold. Cool. My GLD position, which is just an ETF that tracks the price of gold. I bought it. I wish I had more entries like this, Marko. It would make my life a lot easier, but I was able to catch this pullback. And
nice.
Yeah. Yeah. So I would like to just on this one, if we can see a break through the high, if we get, closure above that level, I'm going to go ahead and, call that a higher low and trail my stop. So that's on my to-do list today, is if we can see that gold push, that's what we'll be looking for. Nice. So last one, guys, on Bitcoin. Marko, anything you see on Bitcoin? Is it making any moves here?
Let me take a look. I think Bitcoin is just a bit stagnant. Yeah, so on this daily chart, it's just not doing anything like it hasn't been doing since the 18th of March. Fortunately, it is just very correctively, you could even say descending, but I would say it is mostly range bound. And yeah, the hype is gone, which is an issue for Bitcoin. Ethereum looks even worse, if I remember. Yeah, Ethereum is looking even more bearish with some major bearish legs, even broke the major lows, continued down. So for me, I don't really see a bullish scenario for the world of crypto right now. I'm leaning more to a bearish side. So either we get a really long range, which I don't think it's gonna happen. It usually doesn't happen near all-time highs. Instead, I think we're gonna drop. But of course, I'm gonna wait for the signature. I'm gonna do nothing. If I was trading it, I would do nothing at this point. I would wait for that signature move up or that signature move down to be a buyer or a seller in this market. But if I had to make a decision, I think a bearish scenario is more likely.
Okay, yeah, fair enough. And I like the way you phrase that. Is we're talking today specifically about, like, we may have a bias on something, but I think all three of us will agree, like, there's bias and then there's actual like triggers that get you into a trade and actually structure a position. Because I might be on the overall, like, I would say I'd like to have some Bitcoin in my account, but the price action is not making sense right now for me. On my strategy, I can't find any entries. So I guess Miko, talk on Bitcoin, but also on that concept. Like, I guess how would you define like bias differing from actual setups and trade executions?
Yeah, I can go through that with Bitcoin, but with Bitcoin, the way I'm seeing it right now is that we've been moving in this descending channel for a while now, and we're kind of just trading in the middle. So I wouldn't be interested at all with the price action here until we come a lot lower down or a lot higher up to the top end of the channel. If we do reject successfully, then there could be some nice sells. If we do see a nice breakout, there could be some nice buys. But in the middle here, I wouldn't want to touch Bitcoin. So I'll just mark this as a range and just wait for more price action. But in terms of bias and then execution, because bias is one thing, coming up with an idea, okay, I think Bitcoin is going to go higher. But then looking to trade that is a whole different kettle of fish, because you have to think logically, where am I going to put an entry? Where am I going to put a stop loss that says I'm incorrect in this position? So you don't just enter anywhere and put a stop loss anywhere, because the idea might still be correct, but because your stop loss is in a non-logical place, you will lose the position regardless. So the idea is to wait for a solid bias and wait for a solid opportunity to buy that and that of course will take a lot of patience. So for example, like Bitcoin, if you're looking for a breakout opportunity, waiting for a breakout like this will take the patience to actually wait for the move, and then maybe looking for some opportunities on the top side of it for some retest or whatever your trigger is. Then it makes a bit more sense because you have a logical place for a stop loss, and then you can actually trade that bias. But a lot of people just jump in and trade the bias without necessary confirmations, which is obviously a bad cycle to be in.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.